the product that we've got here, i.e. London, W1 real estate, it has only ever been available to the super rich until now. 10 to 12% as an overall ROI, and that's something we can achieve. Tokenization is the future for many asset classes. London has one of the most robust, if not the most robust, property markets in the world.
Dear viewers, welcome to another issue of Stobox Interviews, where we speak with entrepreneurs, researchers, and industry leaders who move the world forward. And today, I am pleased to have Gareth Street, managing partner at Avora Capital, a prominent UK real estate investment firm that has already attracted millions in capital into real estate and is now exploring tokenization as one of the amazing opportunities to further bring liquidity and reach new investor audiences. I am your all-time host, Borys Pikalov, co-founder and chief analyst at Stobox. Gareth, it's a pleasure to have you here with us.
Boris, yeah, absolute pleasure to see you today.
Okay, Gareth, let's get right into the discussion and tell us about your background and about Avora Capital.
Okay, sure thing. So, personally, I've been involved in the property industry for the last 15 years now. Okay, now combined, our team has over 80 years experience plus. We've raised tens of millions of pounds for property acquisitions, ranging from residential developments across the UK and Europe, but also, all the way through to commercial real estate, such as luxury hotels. Now, in terms of our track record, okay, absolutely speaks for itself. We've built a fantastic network of clients, and we currently work with hundreds and hundreds of repeat clients on a regular basis. Now, we've got a focus, okay, on strong yields with excellent growth and, of course, defined exit strategies.
That sounds great, and I am truly amazed by having such an accomplished entrepreneur with us today. Tell us a bit more about your tokenization project. What property do you want to bring to the market? How much are you going to raise, and what could investors expect?
Okay, good question. So, okay, with this particular acquisition, we're purchasing a luxury 2-bed penthouse in W1. Okay, now W1, for those that don't know, it's Great Portland Street, Marylebone, London. Okay, now the location is widely regarded as the place to be. Okay, it's the most in-demand postcode in London. It offers access to world-class shopping, world-class dining, healthcare, first-class access to the CBD, and of course, fantastic transport links. It's in great demand, not only for tourists, but business people alike. Now, in terms of the actual property itself, we're raising circa 4 million euros. In terms of the actual finish, okay, it's absolutely a luxury property. Okay, now it's going to be fully furnished to the high spec. It's got floor to ceiling panoramic views. It's, a truly fantastic place, not only to live and stay, but obviously both short term and long term. Now, in terms of the property itself, it's currently under construction. Okay, so it's going to complete in a year's time. All right. Now, there's good reason for that. It's actually a good thing for the investor. Okay. And if you could imagine, okay, yourself, the value of that property is going to be more in a year's time than what it is now. So it means for investors that they're actually going to be making money from day one. Now, in terms of the strategic plan and the business model for this particular property, it's going to be aimed at the short-term rental market, okay, through sites such as Airbnb and, of course, Booking.com. Now, this enables us to do a number of things, okay. Firstly, it means we get the highest rent possible, but it means, of course, we're still achieving a good end product for the end user and the guests that are staying in it. Now, this actually translates to a much higher yield than possible with, your typical residential buy-to-lets. Okay, now because of the location, as I mentioned, it's A1 London real estate. The occupancy we can achieve is 90%. So it's very attractive on all fronts.
This is funny with some other clients. When we've been doing modeling, the maximum occupancy they are putting in the financial model is 80%, like the best they can achieve. So having 90% occupancy is just fantastic. And I definitely see the benefit of investing in such a hot market in the center of London, as far as I understood from your explanation. This is truly fascinating. And from what I'm hearing, one of the ways in which you create value is through the right selection of target audience who is going to stay there. So there isn't going to be just random traveler. This is a premium property for business people who are probably paying from their corporate cards, I assume, and thus can often afford higher expenses than they would otherwise if it was a personal expense.
Yeah, no, look, absolutely. I think that it's something that I guess that we might touch on later in the interview. But one of the things about this particular area is the demand. It's not only through the roof with business users and corporate organizations, but ultimately it is a very affluent area anyway. So it's got a truly global feel, and as a result, it does attract wealthy clients. But saying that, it means that the yield is very good, the occupancy is very good, and the growth of the property is obviously through the roof.
And if we could get some tentative numbers, I don't want to go into investment advice, and definitely understand that there is no guarantee for future performance. But from what you're currently seeing, purchasing the property off plan and having such a business model, what yield would you expect annually on that investment?
Okay, good question. So there's two aspects to look at here. Okay, firstly, if we look at the rental yield, okay, usually in London, you'd probably be looking at 3 to 4% top end, okay, for a traditional residential property. But because we're targeting a different market in a slightly different way, i.e. short-term rentals to the likes of Airbnb, as I've just mentioned, conservatively look at around 7% per annum and hopefully 8% and above. Now that's the rental yield. Okay, now if we look at the growth, London is absolutely exploding, which I can touch more upon in a moment, but we're looking at 3 to 5% growth per annum, and that is absolutely achievable.
Okay, so total, we're speaking for about up to 10% or maybe even more in good years in the total profitability.
Absolutely, yeah. We're aiming 10 to 12% as an overall ROI, and that's something we can achieve.
Yeah, for real estate, this is, and especially for a rental real estate, this is a very good yield. With some other clients who are doing rental properties, we are seeing yields in the range of 7 to 8%, which is still very good for real estate, but definitely not as good. And this definitely is higher than profitability of S&P 500, for example, while offering lower risks of real estate. So I definitely see how it is attractive. And I assume that this is exactly how you manage to raise tens of millions of pounds, by finding and offering such kinds of attractive deals that beat not only property market, but also other types of asset classes.
Okay, Avora Capital in the UK has been around for some time. We've got a portfolio of circa 50 million already. Okay, now we've always had a focus on achieving high yields, in strong demand area with good growth and very defined liquid exit strategies. So, for us, the focus upon luxury London real estate is, was the next inevitable step.
And could you please tell us more about the London property market in general? Because we are definitely entering into the new era of higher volatility, of higher interest rates, and therefore less people will be able to afford properties. On one hand, driving down the demand for purchase, but at the same time, increasing the demand for rent. And thus, the dynamic of the market is definitely shifting. And I'm wondering, how will it work in the next 5 to 10 years?
Look, it's something that I almost speak about on a daily basis. Okay, not only internally with the guys on the team, but also externally to clients as well. Now, one thing I would say okay, is that firstly, London has one of the most robust, if not the most robust property markets in the world. Now, I'll give you an idea. Okay, I was actually in London a few days ago, and you can't help but notice that it's very vibrant. It's buzzing with life. People from all over the world want to be there, as I mentioned earlier. Whether it's on business or just pleasure. But another aspect that you can't help but escape is there is a lot of construction going on there. Okay, now that ranges from anything from restaurants to typical residential properties in high-end areas. But to give you an idea, and quite perhaps an interesting fact that not too many people will know, is that currently, okay, there's over 13 5-star plus hotels that are being built in London. Okay, now why is that relevant to what we're doing? Well, it's very relevant to what we're doing because, as I'm sure you understand, is that hotels, 5-star, one, they're high end, but two, they are short-term rental. Okay, and that is exactly the market that we're targeting. So the proof's in the pudding. Okay, we know that the demand is there. Now, if we actually have a little look more closely at this particular postcode, i.e. the W1 postcode, I'll be completely frank, it just doesn't feel the pinch in the same way that much of the market would. As I mentioned, it's a very affluent area. Yes, people, you could argue people can afford to purchase in this area. However, people are, because it's global, people are willing to pay to rent, and they're willing to pay to get the best. So, it ticks a lot of boxes for our model, but also, the model in this particular area and across London.
Yeah, I would assume, especially in the times of crisis, people are looking for more robust markets with higher security, and especially with higher interest rates. Now, developing markets, emerging markets aren't that attractive anymore compared to domestic markets. So more capital is fleeing into high-end capital concentration areas like London real estate.
No, absolutely. I mean, London is, again, it's something we talk about on a daily basis. It's almost a market to itself. It's extremely robust. It doesn't feel the pinch. The growth is still there. The rental demand seems to get higher and higher. So if you're looking for stability and something that's sustainable, not only with short-term rental yields but long-term growth, then this is absolutely the market for you, for sure.
And what I also liked is that you don't just make decisions intuitively, but look at evidence. For example, the amount of and the number of hotels being constructed, and thus make decisions based on what's actually happening in the real world. And you don't just look at the publicly available evidence that everybody has, but try to walk an extra mile to make better decisions. So this is what I really like about your approach. One point which also caught my attention is your mention of exit strategy. And I guess this is one of the reasons why you decided to pursue tokenization in the first place. So it would be great to hear from you what attracts you about blockchain and bringing this everything on chain and maybe make it available to more investors. So if you could speak more about that.
Yeah, I mean, look, for us, we've been around for a long time, and we've done, things traditionally, if you like, up until, the last sort of 12 to 18 months. Now, tokenization, okay, is absolutely the next logical step for us. Okay, we're constantly looking for new ways to successfully raise capital, but ultimately build more value, okay, into opportunities for our clients. Now, I don't think it's any secret that tokenization is the future for many asset classes, and real estate is at the forefront of that for sure. It's becoming extremely widespread, okay, and it's only going to grow and grow until ultimately it becomes the norm, for everyday people like everybody that will see this, I'm sure. Now, it's a complete no-brainer. Okay, first and foremost, it makes the market much more accessible. Okay, investors can dip their toe in the water, so to speak. They can have ownership of a cash flow positive asset in a way that's never been, previously available. It's simple. Okay, so it cuts out the need for expensive middlemen and, of course, lawyers. Also, it gives investors the ability to trade their tokens much more freely. So, with an asset such as real estate, it means the market is extremely liquid. It's very, very liquid. It means I can effectively buy today and sell tomorrow much more easily than has ever been available. And for that reason, it means that it's very, very attractive.
I strongly resonate with the points you made, especially about tokenization becoming the next big thing. We definitely see this happening across the board, not only in real estate, but especially in the financial industry. Most major investment banks and other corporations that have financial departments, they are already betting big on tokenization, on bringing their assets on blockchain, on setting up private blockchains, on issuing bonds, even on public chains as Ethereum. So this is real and this is happening. And this is one of the things I like about our clients in general, but specifically about Avora Capital and working with you, is that you are so open to innovation and everything that can bring you competitive advantage. That 1, 2, 3 additional percentage points that might seem small, but if we look at their compounding efforts year over year, this is exactly what creates value and creates wealth. So this is so good to see that many clients embracing tokenization. And so about liquidity, I've been wondering, do you see this being something that would make it even easier for investors to exit from the property? So how big is the liquidity problem within your current portfolio?
One of the things about the Avora that we've always done, we've always wanted to make, our asset classes as liquid as possible. However, this absolutely goes to the next level. I mean, the thing about real estate, depending on the price or the market conditions or the location, it depends on how many buyers or prospective buyers there are for that property. With this, it effectively removes all of that. It gives investors the opportunity to invest at a much lower level than has ever been previously available. Of course, you've got your heavy hitters and people will invest millions at a time as well, but for those looking to try it out, there's always going to be a buyer, because it means it's much more accessible for everybody.
And this is so cool from the perspective even economic equality, because one of the drivers of equality is home ownership. It's the fact that they are amazing investment opportunities that just aren't available to broad public. And so people who have money have also easier time making more money. And it should be expected that this would drive more inequality. So in some sense, this isn't only about giving people opportunity to invest on a broader scale. This is about making the world a more equal and fair place. And on this note, I would like to end this interview by asking you about your purpose. Why did you start Avora Capital, and what legacy do you want to leave behind yourself?
Okay, well, look, I'm so glad that you just mentioned the points that you did. Okay, and the reason I say that is the product that we've got here, i.e. London, W1 real estate, it has only ever been available to the super rich until now. Okay, so the ethos behind Avora has always been equality, making something sustainable, okay, but also making people money. Okay, so ultimately we drive for high returns, growth, and a strong exit strategy. So investing in Avora, ultimately we set it up to have a meaningful social impact. Okay, so something that's sustainable, is stable, but is also very, very rewarding for everybody involved ultimately.
That's a great answer. And I'm so glad to have the opportunity to support you in making this happen and promote this socially beneficial purpose. Gareth, it was amazing having you today. Thank you for giving me the time. Please tell our viewers how they can find out more and maybe explore some of your opportunities.
Okay, Boris. Well, listen, obviously a pleasure to see you again. Obviously, we are on the Stobox platform, and we're proud to partner with you guys for sure. Our website is avoracapital.com. Stobox is hosted on that, okay, with access to the current, product offering that we've mentioned here. And, watch this space. There'll be lots more updates, coming your way.
Thank you, Gareth. And thank you everybody who took the time to watch this interview. Please don't forget to subscribe and watch some other great discussions with amazing people we have. And make sure you check out the Avora Capital offering. This is one of the best that I had privilege to see, and I definitely encourage you to at least check it out and explore, maybe discuss with your family and investment advisor whether it fits your portfolio and your needs. So thank you for being with us, and wish everybody a pleasant time.